traders, we're looking at the Kiwi Yen 4-hour time frame. Quite a nice bullish trend here. Strength in the Kiwi, weakness in the Yen. So I'm looking for a buy opportunity. Now what I want to do here is show you a couple of scenarios. One is this one. So let's just pull a fib from, well, we could probably go from here. An ideal entry point on a 4-hour time frame, if we're looking for a discounted entry, is back down in this yellow zone. So let's just throw in a long position at the 61.8 and consider something like that. That's quite nice. We've got a 1 to 5, nearly a 1 to 6 risk reward. So that's our 4-hour idea. Targets, obviously, we've got liquidity resting above these highs, and we would have liquidity resting above here. So that's my ultimate target, pretty much up here. That's one idea. Now let's go down to the hourly time frame, and I'll scrunch it up so that we get pretty much our 4-hour perspective. So that's what we saw on the 4-hour. So now let's expand this and get a bit closer to the action here. Just move that across so we know that that's our 4-hour idea, and we have a lower time frame. The market's a fractal. Okay, so if you see a price swing on the higher time frame, well, we're going to see these price swings within it, right? This is a 1-hour time frame. So let's just think of this. One of my members asked me about price swings and fractals. So let's just consider this a 4-hour price swing, low to high. And within that, we have this fractal idea of multiple price swings on the lower time frame. And I wanted to sort of paint this picture to explain to him what I was talking about. Anyway, so we've got this trend here, you see, on the 1H. Now here's the thing with this. Given the Kiwi is gaining strength, or has done, and the Yen has fallen back, we don't know whether this is going to pull back or how far it's going to pull back. And on the 1-hour, the hourly time frame, I mean, if we grab a fib, and if we're looking at these swings, these price swings, well, here we go, look. This is what I'm talking about. So we've got low to high, pull back into the 61.8, that's our entry point. Low to high, 50 to the 61.8, there's an entry point. Low to high, 50 to the 61.8, okay, there's a potential entry point. So on this trend, we could consider something like that. But on the 4H, we've got this thing set up. I guess what I want to explain or paint a picture in this video is there's risk involved, and these lower time frame, I mean, a lot of these are going to work out, but at some stage it's going to do that. So it's been trending up nicely, and then all of a sudden they decide they want liquidity under here, and then they'll hit it and you get taken out. So that's the risk. You know, these two trade opportunities, what do we do here? Well, you know, you want the risk reward. So if you stretch out your stop loss, you're blowing your risk reward on the hourly chart. But this could be a shallow pullback, right? And if that's the case, then we get a fill. And let's assume, I mean, I'm saying this because how many times have I set up limit orders and the market heads off without me, and, you know, I get left behind in the dust. So this is the dilemma. Anyway, we could consider that. I'm thinking to split my position in two. Whatever position size you allocate for this trade, divide it into two. And I'm going to set one pending order here and another pending order down here. If one of them gets filled, okay, it's not a hugely profitable outcome, but, you know, I got a nearly, 1 to 2, slightly less. Prefer a 1 to 2 minimum. And I'm okay with that. And if it happens to retrace all the way back down, we get a deeper retrace and this fills, then it's happy days because we've got both of these positions in, and that would be a nice outcome. Now, the thing is, risk management. There's my stop. I've worked out my position size. You have to allocate a certain percentage of your account to each trade and manage that really, really well. That's the secret. You mess that up and you're going to blow it. It's divided into two trades with one limit here and the other one down in here, right? So that's my take, guys, and I would love your comments on this. Let's just put a limit buy here, buy limit, and click the link below and check out my YouTube channel, because I've got some videos on scalping a 3-minute / 15-minute. It's a scalping / day trading strategy that could interest you. So that's what I'm doing with this New Zealand yen at the moment, guys. I got 2 limits. Stop down here. To ultimate target will be that high. Let's just go back out. Yeah, up in here. You know, you want to consider that this is most likely. See this thin candle? It's most likely going to be hunting this high. These buy stops over here. All right, definitely. I mean, that's where I would think this is going to go. So that's my idea. Can it turn around and go the other way? Okay, it can. So yeah, there's a risk involved. I'll wrap it up at that. But I hope you have a great day, safe trading, and we'll see you in the next one.